Inflation has continued on a downward trajectory, reaching the lowest level in about 4 years. Lower fuel prices were the main driver of the October inflation, with petrol and diesel prices down by 114 cents per litre in the month.
The rate in October is the lowest since June 2020. That was in the early days of the COVID-19 pandemic. Falling fuel prices remain the primary factor behind the slowdown. Petrol and diesel prices declined by 5.3% between September and October, taking the annual rate for fuel to a negative 19.1%. The price for inland 95-octane petrol in October was R21.05, the cheapest since February 2022, when the price was R20.14.
Food inflation continued to moderate, reaching 2.8%, down from 4.1% in September. The price index for bread and cereals declined, while inflation for milk, eggs and cheese also recorded a steep decline. Sugar, sweets and dessert inflation also went down.
The surprise in the data was that food inflation is even more benign than we expected, with an increase of just 0.4% relative to September. This should be the bottom in the inflation cycle. In other words, from November, we expect a gradual increase in the inflation numbers, and the Reserve Bank is likely to look through this temporary decline in inflation. The Reserve Bank typically focuses on inflation 12 to 18 months from now, because monetary policy can't influence the immediate inflation numbers to a significant extent, but it can still have an impact on the inflation trajectory 12 to 18 months from now.
Inflation is well below the midpoint of the Reserve Bank's target range, making a good case for another interest rate cut. The central bank will announce its interest rate decision on Thursday afternoon, widely expected to cut rates by 25 basis points.
The lower outcome means that South Africa is likely to see a 25 basis point interest rate cut tomorrow. That's 0.25%. The lower inflation comes on the back of fuel price cuts and high statistical base effects. Looking forward, inflation is expected to remain below 4.5% over the course of next year, engendering further interest rate cuts. However, the month of November does see a fuel price hike and, of course, a low statistical base effect, both of which should push inflation back above 3%, but still below the midpoint of the inflation target. The low inflation outcome is also positive for consumers, as it means higher real incomes or incomes adjusted for inflation.
Upside risks to inflation going forward include the impact on the rand exchange rate of possible tariff policies of the incoming US President Donald Trump, geopolitical tensions, and the impact of the drought on crop harvests. Gloria Sefakomusi, SABC News, Johannesburg.